A lot of people who drive and are impacted by gas prices are also impacted when they fly because airlines have to buy their fuel as well. And we're seeing that Katrina is having quite an impact on some of the airlines, too.
Well, it's going to affect a lot of industries. I mean, there are over 6 trains and barges that come in and out of shipping ports in Louisiana and through the Mississippi River. They're going to be stifled. So I think it's not only the airline, it's other transports, goods that are being delivered across the board. And this is ultimately going to affect the consumer in one way or another.
The total amount of damage, the estimates coming in are, in some cases, upwards of $26 billion. And, of course, there's going to be a huge insurance payout. What's the implication for insurance rates in the future?
Oh, there's definitely going to be affected. Insurance companies aren't going to lose and have to pay out. But it's very difficult to assess the damage at this point. We have to wait till the floods recede, and then professionals and specialists can go in and assess the damage. But it might not be as devastating as Hurricane Andrew, which was over $21 billion, but it should be a little bit worse than Hurricane Ivan, and some say it should be the second costliest hurricane in U.S. history, probably between $10 and $20 billion.
All right, thanks very much for your thoughts this morning, Christopher Castaldo, about the long-reaching, far-reaching effects of this storm. StockTraderPress.com. Thanks, Christopher.
Speaking of car travel, consumers are still paying a high price to pump gas, and soon other industries may be raising prices as well.
Chris Castaldo, the CEO of StockTradersPress.com, says we're going to feel the pinch from more than just the pump. We'll get to that in a sec, but let's talk about prices. Have we peaked at $3.40, $3.50, in some cases closer to $4 a gallon?
I think gas prices certainly have peaked with speculation of traders not knowing what the damage really was, but now that we can assess the damage, prices will, curtail. They'll come down a little bit, but I think we're many, many, many months before seeing levels that we saw just a couple of months ago. And this is really going to take a lot of money out of consumers' pockets to start spending in other areas that now have to go in their tank.
And the New Orleans and the whole Gulf Coast region are such an important port for all sorts of products. We were talking about the price of coffee going up earlier, but what are some other things that might be affected?
Coffee, timber products have been affected. Transport has definitely been affected. And this is a problem, and a lot of people haven't even touched to the fact that we're not out of the hurricane season yet. We could have more hurricanes. We still have September and October, which are not great months. Additionally, if you look at the travel sector, hotels are probably going to be affected. Certainly this is a quiet month for airlines, and it goes on and on. I mean, natural gas prices at historic high levels, and there's no emergency stockpile globally for natural gas coming into the colder months here in the Northeast. That's going to take more money out of people's pockets. And don't forget, people start Christmas shopping in September and October, so that may be a problem.
Yeah, if they've got any money left over after fueling up their cars.
Sure.
There's another problem, too, isn't there, in that in sort of the Midwest, there's a lot of producers of grain and corn and many other things. It's not only a matter of bringing stuff into the country, it's of shipping stuff out through New Orleans, and that's all on hold.
Yeah, that's a major port, and there's, I think, 40% of the exports that go out leave that port. So these oil tankers are certainly going to have a field day because I guess they're holding the trump card if something has to be transported in and out and there's not as much activity. There's 6 rail trains that come in and out of the ports in Mississippi, and they've been kind of shut down. So it's going to be very expensive, and it's going to be ultimately, trickle down to the consumer. And we've been paying through, home prices. We've been paying with energy prices, and sooner or later, you just kick a dog. It's gonna bite back, and we can't keep spending.
I heard one economist say there's a silver lining in that this kick starts kind of a renewed housing boom, and it creates jobs, and it does in a weird way sort of spur economic activity, at least in that region.
Well, yes, that is true, but that's in a concentrated area. The housing market has been robust, and everybody's been trying to pick the top of the housing market because it's been so high, and this may prolong it. We have housing materials that are in short supply, whether it be windows, doors, plywood, roofing materials. Florida has been growing very robustly. Now a lot of those materials will be concentrated towards New Orleans and Louisiana, and on the 20th of this month when the Fed meets, Greenspan may kind of hold back and ease off on interest rate hikes, and that may prolong a housing boom.
And a lot of folks on Wall Street will like that. Christopher Castaldo, thanks very much. Appreciate
You're welcome.
it.
Thank you.
All right, coming up. Make your money work for you, and it doesn't take a fortune to begin investing.
The Dow closed down well over 100 points yesterday and nearly 100 points the day before, but don't let that scare you away from getting in the game. Joining us this morning with some tips on investing on the cheap is Christopher Castaldo from Stock Traders Press. Thanks very much for being with us.
Oh, thanks for having me back.
So it's a buying opportunity, right, when things go downhill on Wall Street?
Well, I like when stocks get cheap, but I don't see really any days. I do see every day as a buying opportunity, because investing should be something that you do over a period of time. You shouldn't just throw one chunk of money in the market. You should dollar cost average and put a little money in the market on a regular basis, and that way you'll diversify and have good cost averages, and you will buy dips.
What is the minimum amount you need to really have it be worth your while?
Well, I guess if you go to the casino, you can play nickel slots or you can sit at the big tables, but the market is the same way. And the important thing is just to get started. You can put $50 or $100 into the market, and if you have that much to invest, I wouldn't say buy individual stocks because you don't have enough to diversify, and most people don't have the discipline to do it. But I would buy a broad-based mutual fund or an index fund, which the diversification will be done for you.
Right, you basically are investing in a large number of stocks, and somebody else manages those for you, right?
Yes, you have a professional manager, and they have, funds that will focus on bonds or retail stocks or energy stocks. I would buy a broad-based mutual fund that covers the entire market.
Energy's pretty hot right now, right? If you can invest in there, that's good advice.
Well, it's really good, but eventually energy and real estate is like musical chairs, and someone's going to be left without a seat. You don't want to chase a hot sector. Because chasing it sometimes is not good, and it could turn a bad situation worse, where you're kind of buying the top. People tend to jump into real estate. Everybody's buying real estate, but eventually someone will buy the top tick, and that could hurt. So you don't want to just chase winners. You want to buy sectors that have been depressed a little bit. The financial sector hasn't been doing great, but banks are going to be around for a long time, and so are brokers. So sometimes you want to buy some of the sectors that are out of favor, as opposed to buying the stocks that are always in the news right now.
So most of the growth that we're likely to see in energy stocks has already happened for now, right?
Sure. I mean, how much higher can gas prices go, or natural gas prices go? And yes, they could go a little higher, but I would rather buy something that's a little out of favor, where I don't have as much risk. Because if we hiccup, we can see energy prices drop sharply. But I think you're really trying to squeeze the last drop out of it.
A lot of people will say that they simply don't have the money to invest in anything, but can you give any advice on how in your daily living you can come up with as little as $3 to $5 a day over the course of a month, which adds up to $100, $150 a month? How do you do it?
Well, I guess now with gas prices, people have to be more conscious of their driving habits or their energy conservation habits. And you can do the same thing with your everyday life if you really make a plan and you write down your expenses. People spend money frivolously. I mean, don't go to Starbucks that extra time for that $4 cup of coffee. And the nickels and dimes add up, and that's why people on average salaries over time can retire very wealthy. School teachers probably retire some of the wealthiest because they're very frugal, they're very prudent, and they have a little bit coming out of their salary every single week, every single month, but they do it over 20 years. And that's the key to successful investment management, doing it over time. Don't overweight in one stock or one sector. Diversify. Because if you have 10 or 15 stocks and one doesn't do well, it doesn't affect your overall portfolio because you only have a small portion in there.
And start young.
Absolutely.
Yeah, that time is of the essence, isn't it? Because the sooner you start, the better off you are.
Absolutely, and it should be woven into the fabric. I mean, start putting money into an IRA. Start saving for a rainy day. And, the earlier you start, the more you'll enjoy, I guess, your golden years as you move towards that age.
The golfing years.
Okay.
The golden years are the golfing
I like
years,
that.
yeah.
All right,
thanks,
Christopher Castaldo, thanks very much.
Thank you very much.
Yeah, thanks
Appreciate
for coming
it.
in.
Thanks, Chris.
And coming up this
about the falling economy.
As far as we can judge, we have had a very dramatic slowing down.
But Wall Street reacted with a rally when Greenspan cut interest rates a half point on January 3rd and again on January 31st. Bringing the rate to 5.5%. Chris Castaldo of Stock Traders Press says the falling interest rate environment is good for the economy and Wall Street.
It brought a lot of cash off the sideline and into equities, which definitely started off on a positive note for the new year.
Last year, the Nasdaq had its worst return in its 29-year history, down 40%. But Castaldo says with the positive moves made by the Fed in January, he believes that investors, while still very cautious, are taking another look at the stock market. And that's in part because stock prices are on the low end. So he says it's actually a good time to buy. Rule number one, if you're heading back into the market, unless you're a pro, don't do it on your own.
People are seeking professional